Hi, and welcome to The Money Factor. On today's show, we're going to be talking about flexible business financing options and whether you, as a business owner, are looking at the right solution for your business. I'm Ian Varley, CEO of Eagle Business Credit, and I have with me today Nicole Wolfson, one of our business development associates. Welcome.
Thank you for having me.
Thank you for being on the show. And we're going to be talking about some of the challenges that the business owners that we speak to on a daily basis are telling us about, specifically where they have a drop in revenue, and have they got the right solution for their financing needs, specifically when that revenue is dropping. What are some of the things you're coming across?
I do think that a common fear is that a drop in revenue is something that scares most of the business owners we talk to. And there's different types of funding options. Not all of them are as flexible as they need to be.
Yeah. I mean, people that have a bank line of credit, you may have a covenant in there that requires you to have a certain net worth ratio, or no matter what it is. And obviously last year was particularly difficult. Lots of people have seen their revenues drop. We're getting calls from people that are worried that they're going to breach some of those covenants and whether there are any other solutions.
I think that bank funding can be very rigid. I think there's a lot of rules and restrictions, and they're generally looking at past revenue.
Right.
Some other types of flexible funding look more towards the future.
Right, exactly. So again, if you're worried about those types of things, we're happy to help. One of the things that factoring does that's a little bit different to bank lending is we're looking at your receivables. So we're looking at your customers and their ability to pay, as opposed to your balance sheet or your personal credit, which are really secondary items for us. So I know when you're on the phone, you're asking them about their business and specifically how they're doing. It's much less about, what's your balance sheet looking like, just because it's not relevant, right?
I think we look to see how your business needs to grow.
Yep.
Factoring is so flexible that we can grow with you, and it's very easy to qualify for.
Yeah.
You don't need to worry about running out of funds. And if your revenue has dropped, there's a fear.
Yeah.
What flexibility can I get so that this business can grow with me?
Right. And banks being so regulated, they may not have the flexibility that you need. So if your revenue is dropping and you've lost business last year, now your bank's saying, well, we've got to restructure your facility or maybe need to look for a different form of finance. Don't despair, there's plenty of alternatives. Factoring is just one, but we can have a conversation with you, look at your options. You may find that actually factoring is going to help you turn things around and get back to that point when you are bankable again. And you have been able to go through, a steep decline in revenue, but fix things and get ready for the next growth curve. Another thing that many people need is equipment financing, whether you're a trucker or even a restaurant owner or any kind of business that needs asset finance specifically on equipment. It's not something we do here in-house at Eagle, but we work with many partners. And obviously, again, it's important if you have a lease on a piece of equipment, you've got to keep those payments going, particularly if that equipment is essential to your business. So you need cash flow, you need smooth cash flow to make sure that those lease payments can be made. Truckers obviously are looking for trucks, trailers, that kind of thing. And again, we work with many partners that will be able to help them. So, a lease may be less flexible because you have to make that monthly repayment. Factoring can work alongside it. It's a different asset class. We're working with the receivables.
And I think that because equipment finance payments, there is not much flexibility. They are very structured.
Yeah.
Very often factoring is a good hand-in-hand solution.
Exactly.
When you have equipment finance, you can look at other options such as factoring that will give you the cash flow to make those structured equipment finance payments.
Precisely. And again, we want to make sure that those payments are being made. So if you need to smooth out your cash flow, look at factoring alongside leasing. Okay, you need certain assets funded in a certain way. A lease is going to fit those. Factoring is for your receivables and for your working capital. And it will free up that cash, help you smooth your cash flow so that you know that that lease payment isn't going to be hanging over your head and it's got to be made at the end of the month. You've got the money there ready to make that payment. We can work alongside it. Another form of finance is a line of credit. Now, whether that's an ABL or asset-based lending-based facility or another bank facility, It's a line, so you have flexibility up to a certain amount to draw funds. Obviously, it has a fixed limit. So if you are growing and you have that line of credit limit, it's probably more difficult to renegotiate the terms, particularly if you're growing super fast. We're finding that many people see lines of credit as very attractive because, who doesn't want that? I've got a line of credit, you can say to your customers, but it may not have what you need as a business in terms of those flexible options if you need to grow.
I find that a line of credit option is what most people think they want because you replenishes it as you pay it back. But I think it's difficult to get a large enough line of credit. And if you do need to increase your line, I find that you have to jump through a lot more hoops.
Right.
So it is one of the more attractive but less flexible options.
Exactly. People want them. They sound good for your business, and they are. They're going to be cheaper than many alternative options, but they will have a lot more strings attached as a result. So you get flexibility, but you've got to maintain that balance sheet. You've got to maintain that liquidity and those profits. And if you can't, for whatever reason, maybe your revenue's falling again, perhaps it's going to be a bit of a straitjacket for your business. So again, don't be fooled that a line of credit is the answer to everything you need. You should look at alternatives, ones that are perhaps based more exactly on the state and size of your business at this point in time. All right, merchant cash advances. That comes up in nearly every conversation, I think, these days. Many people have been online and been able to take advantage of them. They're very easy to obtain. Literally just have to fill out an application with a few questions, but they're expensive. And we find the problem with them that many people fall into is the trap that you've got to make this daily or weekly repayment, and people fall behind, right?
I see merchant cash advances as something that they're fast, they're quick, they're expensive, and in the long run, hurt your cash flow more.
Right.
Because you are being obligated to pay back something every day, regardless of you have revenue every day. And a lot of customers we see are taking more than one.
Exactly.
The more merchant cash advances you take, the bigger hole you've dug yourself in. So again, there's benefits. It's fast, but it's expensive, and it can usually hurt your business more than it can help in many cases.
You're exactly right. And again, people think that they're not as expensive as they look, and they think they're going to have the money available to make those repayments on a daily basis. And then they have a bump in the road. Something happens. You lose a customer, or a customer's late paying you. You don't have the money in your account ready to make that payment. And that's when the problems start. You fall behind, you go into a default rate. You're in a default rate, things are far more expensive. Maybe you can renegotiate the facility, but maybe you can't. You've got to look at alternatives for your business. Taking another merchant cash advance is not the solution. You're just digging that hole, like Nicole said. And so if you're in that kind of trap, please give us a call. We have solutions that we can help you get out of that and into something that is going to be more in tune with your business. Instead of having a loan repayment that you've got to make on a daily basis, factoring can be a great alternative. So let's talk a little bit more about factoring. Obviously, we are a factoring company, so full disclaimer, we're going to be talking to you in glowing terms because we live, eat, and breathe this on a daily basis. But I think we're passionate about it as well. And Nicole, I know you speak to many business owners on a daily basis. Tell the people about some of the flexible terms that we have.
Factoring is wonderful because we don't look at the past.
Yeah.
We look truly at what your business is going to do. Our facility sides are based truly on your growth. Mm-hmm. We have a lot of flexibility because we can grow as quickly as you need us to. We take a look not at your personal credit,
yep, not
at the financials of your business as most important as who your customers are. What's nice is that there are no repayments to make.
Exactly.
It's I think it's easy to qualify. You can grow as you need to. And there's not a lot of really strong language or covenants like a bank would have, right, that really would restrict your growth. We're here to support you as you grow, and it's a tool that you can use versus something that's going to hold you back.
Right. We're always looking for a way to help you and get you approved, not for reasons why we can't approve you. So one of the things we do is ask you about your business. Tell us about your customers. Tell us about your revenue. Tell us about your plans. We want to hear from you what's driving you in your business and what your passion is. And then we want to make sure that our solution is going to fit and become an extension of your business more than anything. we want to be that trusted funding partner. And clients that sign up with us stay for many years because it just works. We get it right from day one.
And I think what's nice about factoring is that this can work in conjunction with other types of funds.
Sure.
If you're a trucker and you need those freight bills paid and you need cash flow on your staffing invoices, you can also have some equipment finance to pay for your janitorial supplies or your truck. And that will allow you to take advantage of what's out there, so the flexibility of factoring, and then also take advantage of some other options that might be there as an added bonus.
Right, that's exactly right. And I think, again, the most important thing is when you're growing, you need to renegotiate. We're more than happy to do that. It doesn't require a whole bunch of underwriting. Once you're a client, we understand what you're looking for. And, our facility is designed to accelerate your cash flow, which is going to help you grow. You're not going to be held back from taking on bigger orders or finding new customers, because you're going to know that the funding is there as soon as you complete that sale, make that delivery, in order to help you move on to the next one. So many of our clients do grow super fast, and we're more than happy to increase their facilities, reduce their price of factoring each time that's done. And it's a very quick and easy process. So it is one of the much more flexible forms of finance. And like Nicole said, it can work alongside additional funding sources such as equipment leases or any other kind. As long as we're in place on the receivables in terms of the collateral, that's all we need. So again, a lot of flexibility and really not many strings in terms of approval. It's a quick process, right?
And I think one of the benefits of factoring with Eagle specifically is that we can customize your facility to be a fit for you.
Yeah.
A lot of factoring companies have set terms. We can customize our facility, the term length, the volume you factor, and the pricing as well, to make sure it's a solution that is the best fit for your company, not just a fit, but your fit.
That's a good point. And that's why we asked the question, tell us about your business. We want to understand what you're looking to do and how you're looking to succeed, so that we can be a good fit and the right financial partner for you and anticipate those needs as you grow. So you may be wondering, can factoring work with your existing financing that you have in place? We have a lot of calls right now from people that have taken out PPP money, and they're not aware that they can still obtain factoring alongside that. You absolutely can. The SBA are working super fast to provide what we require is a subordination on their hold on your receivables. So if they have a filing, a UCC1 on your AR, they will release that in our favor so that we can come along and fund you. And don't forget, a PPP loan should also be forgivable if you meet the criteria and fill out the forms. And again, we can help you with that. So if you have a PPP loan, you can absolutely factor as well if you have commercial receivables. The same is true if you have an EIDL loan, another government form of finance. We can ask for a subordination on the receivables. They will have a blanket filing on that collateral. So it will work very well alongside that. And I think it's also true to say if you've got equipment finance, as you mentioned about truckers.
The PPP and the EIDL loans, I think they're going to be a temporary fix, but they won't last forever and they will run out. Whereas factoring can be a nice complement and then turn into your long-term solution.
Exactly. But if you have equipment financing as well, remember, we're not looking to take any collateral on your equipment. We're just looking at the receivables. So it will work extremely well alongside that. If you do have other forms of finance, such as an MCA loan or a line of credit, and they have already got a collateral piece that includes the receivables, so you've pledged that to them, we'll need to look at whether they will subordinate that to us or not, whether we then can come in and provide additional funding. We've been very successful doing that for a number of clients. So again, if you have some real estate and the bank's prepared to continue their line just on the real estate and maybe a personal guarantee, but they'll release the receivables, then we can still work with you. So it all depends on your personal circumstances, your particular circumstances of your business, as to how we can carve up the collateral and best help.
And what I find here at Eagle is that we are very flexible in working with other lenders.
Right.
So if you have a lender in place, we're more than happy to work with them on solutions so that you are able to factor as well as keep your other financing.
That's a great point. We don't want to have a detrimental effect on your existing financing in any way. We're always going to want to work in partnership with those forms of finance for you and make sure that our funding is going to provide you with additional funding. That's what it's for. that's why you come to us.
And we do have a network of lending partners as well. So if you come to us for factoring and you have a need for another solution, we could put you in touch with another lender as well.
That's a great point, Nicole. All right, well, that's all we have time for on this episode of The Money Factor. Thank you for checking in with us and watching our video. Thank you, Nicole. How can people get hold of us?
You can visit us at www.eaglebusinesscredit.com or give us a ring at 855-420-8318.